Every country today is living in the red. The United States, the world's largest economy, now carries a national debt higher than the value of everything it produces in a year. Europe is deep in its own fiscal trenches. Japan's debt towers above its GDP more than twice over. Even nations with overflowing natural resources or those exporting more than they import year after year aren't immune. But beneath all the headlines, all the political shouting, and all the panic about deficits lies a deeper question. If the whole world is in debt, who exactly is everybody borrowing from? This is the Global Financial Archive, where economics meets power and where the numbers on the page are never just numbers. Debt is more than a line item on a government budget. It's the hidden architecture of our modern world. Every war, every crisis, every age of growth, and every collapse sits atop an interconnected web of promises. Trillions of them. And if you trace those promises back far enough, something startling emerges. The world doesn't owe money to some shadowy outsider. It owes money to itself. But that doesn't mean everyone wins equally. To understand how humanity reached a point where global debt now exceeds $300 trillion, far more than the value of the entire world economy, we need to go back to debt's origin story. And no, it didn't begin with Wall Street or Silicon Valley. It began with kings, cannons, and the cost of war. In the late 17th century, England faced a financial wall. War with France had drained the treasury dry. The crown needed money, and fast. But instead of demanding more gold from the people, the king turned to wealthy merchants. In return for financing the fight, those merchants demanded something revolutionary. A permanent, reliable stream of interest backed by future taxes. This wasn't just a loan, it was the birth of the modern government bond. To manage this new system, England created the Bank of England, not as a bank for citizens, but as a bank for the state. Suddenly, the government had a new superpower. It could spend money it didn't yet have, borrowing from tomorrow to fight today's battles. Other nations noticed quickly. France adopted the model, the Dutch perfected it, and across the Atlantic, the young United States used government debt to fund its revolution, unify its states, build railroads, and finance its rise. Debt, once seen as a sign of weakness, became a symbol of strength. A nation willing and able to borrow was a nation prepared to grow. Over centuries, the battlefield shifted from territory to balance sheets. Empires were no longer built solely through conquest, but through credit. And today, this legacy has taken on a life of its own. The United States now issues trillions in treasury bonds, the global gold standard of debt. Investors around the world buy them not because they want America to pay off its debt, but because treasuries are considered the safest asset in existence. But here's the twist. Most of America's debt is not owed to China, Japan, or foreign governments. It's owed to Americans themselves. Banks, pension funds, mutual funds, insurance companies, and the Federal Reserve hold the lion's share. Your retirement account, your insurance policy, even your bank deposits all rely one way or another on government debt. It's a circular system. The government issues bonds. Financial institutions buy them. The central bank often buys those bonds from the institutions, creating new money. Citizens pay taxes that fund interest payments. Those interest payments go right back into pensions and financial markets. The creditor and the debtor are reflections in the same mirror. And this isn't just an American phenomenon, it's global. Japan buys U.S. bonds. The U.S. funds the IMF. The IMF lends to developing nations. Developing nations invest their foreign reserves back into Western debt. It's a planetary merry-go-round of IOUs. Every promise is secured by another promise. Every debt is held up by another person's savings. And sitting above all of this are the real power brokers, global financial markets, hedge funds, pension giants, sovereign wealth funds, rating agencies, insurers. These institutions, controlling tens of trillions of dollars, determine which countries can borrow cheaply and which must pay a premium just to survive. When they lose confidence, governments fall, currencies crash, nations spiral. You saw it in Greece, in Argentina, In Sri Lanka, democracy may choose who leads a country, but markets decide which countries make it through the night. And at the center of these markets stand the modern high priests of money, central banks. Unlike ordinary banks, central banks don't simply manage debt, they manufacture it. Every time the Federal Reserve or European Central Bank buys government bonds, it creates new currency out of thin air. The debt on one balance sheet becomes money on another. Every dollar in your wallet started its life as someone's debt. Every digital deposit represents an IOU owed by someone else. There is no such thing as debt-free money. Debt is the backbone of the entire system. For decades, the system has functioned smoothly, not because nations are able to repay their debts, but because investors believe they will honor the interest. Governments don't pay off their debts. They roll them over. It's not a conspiracy. It's policy. Old bonds mature, issue new ones, pay interest, repeat forever. It's a subscription service for running a country. Japan hasn't paid down its national debt in decades. The US won't pay down its $30+ trillion. Europe will keep refinancing forever. And investors are perfectly fine with that, because government debt has become the foundation of global finance. Banks use it as collateral. Pension funds use it to store value. Central banks use it to stabilize currencies. If a major government ever actually paid off all its debt, it would break the system. There would be fewer safe assets. Markets would lose their anchor. The money supply would shrink. Deflation would sweep across economies. Paying off the debt would be worse than keeping it. That's why politicians speaking about eliminating the national debt are selling a fantasy. The goal isn't to erase debt. It's to keep it manageable, believable, and endlessly rollable. The global economy runs not on dollars or euros or yen, but on confidence. Once confidence cracks, everything falls apart. Interest rates spike. Currencies dive. Investment dries up. The promises that seemed eternal suddenly collapse. And when collapse comes, creditors reveal themselves. The IMF, rating agencies, bondholders you've never heard of, banks that never appear in the headlines. Their demands shape national policy, and their power can determine whether millions gain jobs or lose them. This is the untold truth of global debt. It was never designed to be repaid. It was designed to be believed. As long as the world believes in government debt, it works. As long as markets trust the system, it keeps turning. But trust is not evenly distributed. When we say we owe it to ourselves, that's only partially true. Interest flows upward, from taxpayers and workers to financial elites who hold the bonds. Debt concentrates power. Debt amplifies inequality. Debt moves wealth from those who must pay to those who can afford to wait. This system doesn't make creditors villains or debtors victims. It makes both sides essential cogs in the same machine. But machines can stall. And when global borrowing eventually stops growing fast enough to cover old promises, the question, who is the world in debt to, won't be philosophical. It will become painfully real. Because at the top of this pyramid of promises, there is no single villain. Not China, not the US, not the IMF, not the banks. It's all of them. And it's us. We live in a world where debt has become money, and money has become belief. Governments create it, banks multiply it, investors trade it, citizens depend on it, and the entire system keeps going because we trust it to. But if the day ever comes when that trust falters, we'll be reminded of a truth as old as civilization itself. Debt is not just a number, it's a promise, and no promise lasts forever. If this changed how you see global finance, subscribe. History doesn't repeat, but it rhymes, and I'll show you where to listen.